Wall Street is trading higher. Risk-on mood outweighs fears about a new challenge in the global economy, which could be crippled by the second wave of the pandemic. The US dollar index is drifting downwards as investors are encouraged by positive developments in the trade relations between the US and China. China gave up the tariffs on the US imports introduced earlier. Such tariffs will be cancelled from May 19. Investors' optimism is also propped up by hopes for a revival in the pandemic-stricken global economy. Investors reckon that lockdown measures will be lifted cautiously, thus triggering green shoots of a recovery. Futures on the Dow Jones opened the New York trade with a 0.54% gain at the level of 24,233. Likewise, the S&P 500 opened with the same growth to trade at 2,932. Experts at Goldman Sachs warn that investors will be overwhelmed by pessimism soon. Indeed, the global economy is on the path of a painstaking process to regain momentum. However, investors are betting on the best-case scenario. In fact, there are some risks which could enable the S&P 500 crash. Before the index climbs to the level of 3,000 points until the year-end, it is expected to slump to 2,400 in the nearest 3 months. The US dollar index amazed traders with its steady advance since early Monday. Nevertheless, today it again went below the level of 100. The World Health Organization stated that some new ways of treatment contain the gravity or duration of the coronavirus disease. However, even a small positive piece of news on the progress could dampen demand for the US dollar as a safe haven asset. Traders have to be cautious this week, as the economic calendar reminds the market of important events. On Wednesday, Fed Chairman Jerome Powell is due to speak. Besides, several officials of the US Central Bank will also make public comments. Investors are speculating on the prospects of negative interest rates in the US, so they will be alert to the remarks of the Fed officials. Investors are going to reckon the prospects of further monetary easing to determine the sentiment on the US dollar. Today, traders will get to know inflation data from the US. An annual pace of consumer inflation declined to 0.3%, slightly lower than the forecast. The US CPI decelerated to 0.8% month-on-month, in line with market expectations. The Canadian dollar closed yesterday with a drop against its American counterpart, despite the bull's efforts. The loonie will be able to assert itself. The employment report from Canada came in better than expected. Moreover, Saudi Arabia pledged additional output cuts by 1 million barrels a day. Though Riyadh's decision had come as a surprise to the market, oil prices found just a short-term support. WTI climbed 5% in the New York trade. June WTI futures settled up at $25.43 a barrel. July futures are still trading at about $30 a barrel. Saudi Arabia came up with the unexpected pledge to encourage other oil exporting countries to fulfill their commitments. Indeed, the oil market might need deeper production cuts to stabilize supply and demand. Nevertheless, investors still doubt the intention of the OPEC and its allies to meet their commitments set out in the pact. That's all for today. Thanks for watching and see you back tomorrow.